Welcome to lecture 11 of business taxation. We are continuing our discussion on the income from property topic. So moving towards the contents, mainly we are going to discuss deductions in that are related to property income. If you remember when we discussed salary income, so first we would calculate the gross income, and after that we would lessen the deductions, right? And then we would have a taxable income. Same is the case with property. In property there are certain deductions that are allowed by the law, and we are going to specifically discuss these deductions in this lecture. We will discuss repair allowance or repair expenses that are conducted on a property. So those repair expenses are allowed as deduction. Then insurance premium and insurance premium paid for the damage of the to insure the property is again deductible. Then municipal taxes and ground rent. So starting with deductions. First of all, these deductions are only allowed in case of a company, right? If a rent is received, a property income from property is received by a company, then they are only allowed for deductions. Individuals are not allowed for any of the deductions that we are going to discuss in this lecture. Although the deductions that we have discussed in previous lectures related to salary, they are allowed for an individual. The deduction of zakat and donations, etc., are allowed still for an individual. But the deductions that we are going to discuss in this lecture are only allowed for a company. So first, let's start with a repair allowance. Obviously, if we are maintaining property, if we have rented out the property, then it's the obligation of the owner to incur some repair expenses, and those repair expenses are allowed as deductions. So let's just say if we are receiving rent of 1 lakh rupees, then we would first lessen the deductions, whatever the deductions are, and the amount that we would receive would be taxable income. We would calculate tax on this specific amount after deducting the deductions rather than on the gross amount. So repair, the rule is 1/5 of the rent chargeable for the tax before any deductions is allowed, right? So for example, in this case 1 lakh rupees is the gross rent. 1/5 of this amount, that would be 20,000 rupees, it is allowed as deductions irrespective of the amount that we have actually spent on the repair. For example, if we have spent 25,000 rupees as repair expenses, these are actual expenses, then should we deduct 25,000 rupees or 20,000 rupees from 1 lakh of rent? We would deduct 20,000. This is the maximum limit. But let's just say if our actual expenses were 15,000 rupees, then should we deduct the actual expenses or the 20,000 rupees? The rule says it is a fixed amount irrespective of the actual expenses. We do not need to look into the actual expenses when it is the case of repair allowance. We would simply deduct the 1/5 of the rent. So irrespective whether the actual expenses are higher or lower, we would deduct 20,000 rupees. Then there is insurance premium. Any premium paid or payable. Remember, if either we have paid the cash or we have incurred the expense, but we haven't paid the cash, to insure the building against the risk of damage or destruction. So any fire insurance, or let's just say flood insurance to the property, or any kind of insurance that is the purpose of that insurance is to minimize the risk of damage for of the building, that insurance premium is allowed as deduction. Remember, if the employee of a company have done a life insurance, then that would not count, or any health insurance, that would again also not count, or a car insurance done by the company would not be allowed as deduction. Only the insurance premium that the company is paying to regarding the risk of a building damage are allowed as insurance, as deductions. Then we have municipal taxes. We pay certain taxes to municipal authority, whether that being local government or federal government, whether they are paid or payable are allowed as deduction. Uh, there is a terminology which is called ground rent. You might have probably seen, if you are familiar, uh, there are certain shops that are constructed by municipal authorities, and even if we buy the shop, right? If you buy that shop, you would have to pay certain uh, rent to the municipal authority. Sometimes this rent would increase by a certain percentage each year, but anyhow, the idea is that that shop had been given as a lease. You might have heard that there is 99 years lease, then there is 70 years lease, then there are 33 years lease. So what lease means is that even if we pay a lump sum amount, we would have to pay certain rent, right? So the one who have got the property is called the lessee, and the owner of the property is called lessor. The remember, the ownership is not transferred, rather it is just uh, for the rent for specific time period. In that case, any ground rent that the lessee is paying to the lessor is again allowed as deduction. Profit on borrowed amount. Normally, you would see in our income tax law, you would see the term profit on borrowed amount being used, but essentially it is the interest. So the word profit on borrowed amount is used in textbooks, but the term it should have been used is interest. So if we are paying any interest, if a company is paying an interest on the borrowed amount, but remember, the borrowed amount should be for the purpose of either construction, purchase, renovation, extension, or reconstruction of a property, then that interest expense is also allowed as deduction. So let us say company is going to purchase certain property and they have borrowed a certain amount from a bank, and they are going to pay certain interest each month or each year on that property. Then they would be are allowed to deduct that interest amount. Remember, just the interest amount as from the rent before paying the taxes. Whether again that is for the construction, purchase, renovation. Let us say there is already a building and you are going to extend that building, you are going to construct certain more rooms or certain area, then again that interest on that specific loan is allowed as deduction. Okay, sometimes bank do not charge interest on borrowed amount, right? For example, normally the Islamic banking system do not charge any interest. What they do is they say that we would give you certain amount, sum of amount. You can buy the property, and what you can do is you can share the some percentage, let's just say 50% of the rent of that purchased property. So instead they do not charge interest, but rather they want some share in the rental income. Once we have all paid back the principal amount, then we would not have to pay the share. So that share in rental income is an alternate to interest that is also allowed as deduction. Now companies normally have a lot of properties and they would incur certain administration or collection charges. For example, they would hire a person to whom they would pay a salary who would be responsible of maintaining uh, the property or collecting the rent from those properties. In that case, the company is incurring certain expenses. Those expenses are also allowed as deduction, but there is a rule for that. The rule is actual expenses or 6% of the rent chargeable, whichever is lesser, is allowed as deduction. For example, continuing our previous example, the rent is 1 lakh rupees. The actual admin and collection expense, remember, if admin expense are given as, let's just say, 50,000 rupees and collection expense are given separately as 5,000 rupees, then we will need to sum them up and we would have to calculate, uh, then we would have to check that out. So let us say in this case the actual admin and collection expenses are 55,000 rupees, but 6% of this 1 lakh rupees, 6% of this 1 lakh rupees is 6,000. So which one is allowed as deduction? The lesser of these amount. So we would allow 1,000 rupees. Sorry, the rent is 1 lakh rupees. Let me write it over here. 6,000 rupees is allowed as deduction. So the interest would be paid on, sorry, the tax would be paid on 94,000 rupees rather than the whole sum of 1 lakh rupees. We have an example over here. The rent chargeable is 72,000 rupees. Administration and collection charges are 1,000 rupees. And we need to calculate the, the, the taxable income. Remember, we first always calculate taxable income. We have been doing this in previous chapter. We first calculate the taxable income and later on we would see there are different tax slabs and we would calculate tax based on those tax slabs. Okay, so rent chargeable, that is 72,000. Then we have we lessen the repair expense. Remember, the repair expense are fixed. They would be charged even if we haven't spent any penny on repair expenses. And the rule is 1/5 of the rent chargeable to tax. This would turn out to be 14,400. Then we have admin and collection expense. The actual expenses are 1,000 rupees and 6% of 72,000 rupees would be 4,320. So which would we will consider the lesser amount, which is 1,000. So now the total amount turned out to be 56,600. This is the amount that we would call taxable property income, right? Okay, legal expenses. So certain times we might have certain legal expenses. We might have to pay uh, fee to a lawyer, but which kind of legal expenses are allowed as a deduction? Only those legal expenses that are incurred on the property. So expenses incurred on legal services acquired to defend the person's title. What this means, person's title? So let's just say Mr. A says that this property belongs to me, and Mr. B says that this property belongs to me. Then all those expenses that are incurred to uh, during this process, the legal expenses that are incurred are allowed as deduction. Okay, then there is the case of unrealized rent. What do we mean by unrealized rent? Any rent, let's just say the company ABC rented out a property to Mr. A, and Mr. A had to pay 1 lakh rupees as rent on say 30th of March 2021. This should have been paid, but Mr. A didn't pay the amount. So this rent would be called unpaid rent or unrealized rent. So is unrealized rent or unpaid rent allowed as deduction? Yes, it is allowed as deduction, but there are certain conditions that need to be fulfilled. The conditions are that the defaulting tenant, which in this case the defaulting tenant is Mr. A, has vacated the property. So Mr. A should have vacated the property, or the ABC company should have taken the steps that would compel him to vacate the property. Let's just say they might have launched an FIR report, or they might have complained to the authority. Uh, so the evidences of these actions should be available. The second is the defaulting tenant is not occupying any other property of the company. Let's just say Mr. A although vacated ABC's company's this specific property number 1, but there is another property number 2, which is also under the um, uh, occupation of Mr. A. In that case, this deduction would not be allowed. This deduction of unrealized rent will not be allowed. This ABC company should also vacate this property too. If once this property is vacated, which is then this deduction would be allowed, right? So the defaulting tenant is not occupying any other property of the company. The company has taken all the reasonable steps to institute legal proceeding to recover the unpaid. Again, they have proper evidences that they have taken all the legal steps that are required to vacate the property, to compel Mr. A to vacate the property. Okay, let us say Mr. A vacated the property, all the conditions were fulfilled that were explained in the previous slide. Now what? Now Mr. A needed to pay 1 lakh rupees, but because he didn't pay it, it is unrealized and the company fulfilled all the conditions. So this would be considered as deduction, and the company would not pay taxes on this amount. Rather, they would deduct this specific amount from their rent, and then they would pay taxes on the remaining amount. But let's just say down the road, after 6 months, or let's just say after 2 years, Mr. A somehow paid the rent back to the company. So the company recovered the unpaid rent. So recovery of any unpaid rent will be chargeable to tax in the tax year in which it is recovered. Right? So we have already paid the taxes of 2020, 2021, and this is recovered in 2022. So we cannot go back and redo the tax filing of those specific years. What we can do is we can add this amount in our future years or the year in which that unrealized rent is recovered, we can add that in that specific year's rent, and then we would have to pay taxes in that specific year. So after all deductions are made, the remaining amount is chargeable for tax at 29% for the company. So in case of a company, the tax rate would be 29%. For individuals, there are different slabs that we would discuss when we are covering the topic of individuals. So we have covered all the deductions. These are the deductions that are allowed for the company, just for the company. Remember, they are not allowed for an individual. Next video, we are going to cover some examples related to some numerical examples related to this topic. That's it for now.